Hello everybody, this is Lara. Obviously it's me, I'm going to go through my presentation that I did a couple of days ago for the FX Traders Event Hub event, and because I don't have a time limit, I'm going to do it thoroughly for you. First of all, I'm going to compare Bitcoin to other markets, and I'm going to do this on a semi-log scale. No, sorry, an arithmetic scale. Okay, so when we view charts on an arithmetic scale, we can get an idea of the volatility of them. Charts that have impulses that have a curved look like this, with a slow start, acceleration through the middle, and an explosion at the end, typical of commodities, have pretty high volatility or increasing volatility for their bull markets. Euro-dollar has a pretty steady volatility. S&P 500 likes to form V-bottoms and rounded tops, so it has its strongest piece of movement at the start. As price increases, volatility typically declines. Bitcoin is the other way around. Its volatility increases strongly through the middle and explodes more so than any other market at the end, leading to these vertical upward spikes. So it's important to understand this basic difference between Bitcoin, commodities, forex, and indices. When we look at Bitcoin on an arithmetic versus a semi-log scale, you can see why it's really important to view these charts on a semi-log scale. If you view this movement, that's the same piece of movement here, if you look at it on an arithmetic scale, you cannot see the subdivisions down in this early part of the movement because of the huge increase in volatility at the end. But when you view it on a semi-log scale, now you can do a proper Elliott wave count because you can see these movements down here at the start. And if you see a chart like this that has such a strong curved look, even on a semi-log scale, you know that this is a market with absolutely extreme volatility, which is important for understanding how the Elliott wave count is going to unfold and understanding that it's the fifth wave of the impulse that is most commonly the strongest portion. Now I'm going to go through the wave count quite quickly because you get this every week. So you'll be familiar with this unless you're new here and you haven't looked at the monthly charts. From this low to this high, this upward movement for Bitcoin has a perfect 5-wave impulse. Primary 1, primary 2 is a zigzag, 3 is longer than 1, primary 4, a regular contracting triangle, perfect alternation between 2 and 4. Primary 5 is extended in terms, it's extended in terms of price, not necessarily so in time. It's 15.87 times the length of primary 3. That's not a Fibonacci ratio. I'm just noting the lengths of these waves so that you can understand, because of the scale you can't see it, but you can understand that primary 5 moves a much greater distance in terms of price and so potential profit than primary wave 3 does. Primary 3 is a lot longer than 1. It's 38.87 times the length of 1. So from this low to this high, this is a perfect 5-wave impulse lasting 7 years and 2 months. A cycle degree wave should last 1 to several years, so this labeling fits the degree of labeling perfectly. Cycle 2 lasting 1 year was an 84% reduction in market value. So that's an absolutely huge bear market. Again, you can't see how deep it is because of the scale, so that's why I'm putting these numbers so that you can understand how deep this is. From this low to this high, this fits absolutely perfectly as a 5-wave impulse. It's important to note that what gives Bitcoin's curved impulses, that curved look, is the second waves are more time consuming, the fourth waves are more brief and shallow. So when you see a fourth wave that is more brief than its counterpart second wave, for this market, that is absolutely normal to be expected behavior. So for Bitcoin, this impulse looks perfect, and it's followed by a bear market, which is, I think this was a 77% reduction of primary wave 1, and it lasted a year. If primary 2 were to continue, then it would now be longer lasting than cycle 2 1 degree higher. So it's extremely likely it's over here, and we've got some strong technical indication that this low is going to be sustained. At the weekly chart level, here's the end of primary 2, and from this low to this high, again we see 1, 2, 3, 4, 5, 4 and 2, 4 isn't necessarily more brief in terms of time, but it does look a little bit more shallow, and there's nice alternation between 2 and 4. From this low to this high, this upward movement has a really good look as a 5-wave impulse. Now, my only question at this moment, as you know, as subscribers, you know I'm not confident yet that intermediate 2 is over, so I leave the invalidation point down here. My main wave count expects intermediate 2 is over and Bitcoin is on the next wave up. My alternate allows for intermediate 2 to continue further as an expanded flat, and it may not move beyond the start of 1 below 15,599.05. Let's look at past highs and lows using the range of technical indicators I normally use, and I'll tell you why I'm using these particular ones, to identify, using past data and behaviour, what we can look for future highs and lows. I'm going to look at these important highs and lows, 1, 2, 3, 4, 5 highs and 1, 2, 3, 4, 5 lows. This one was followed by a really quick bear market, only an 81% reduction, but if you look back on that monthly chart, you'll see that this is the end of intermediate 3 within primary 3. So this is the end of a third wave within a third wave at 2 large degrees. And what we're expecting now is a third wave at multiple degrees. So this is the closest equivalent in the previous price history with an Elliott wave count that we're going to get to tell us what it might be like in the future. Now it'll be same, different, but let's see what are the commonalities. Are there any commonalities? What did we see in terms of indicators at these highs? They're all followed by major bear markets, this one lasting 4 months, here over within a month, 2 months, a year and a year. And this is the percentage reduction in market value from high to low, well beyond the technical definition of a bear market of a 20% reduction. Although this is high to low, not high to close. It's just easier on the monthly chart to calculate that. So the close won't be far off. Okay, let's look at the first. We're going to do highs in chronological order, and then we'll do lows in chronological order. I like to be methodical about this. So, month beginning 31st of May 2011, well, a week beginning 4th of June 2011. At this high, the first thing we look at is the price chart. What does this look like? We've got this near vertical rise up to the end. Now we're going to go through this chart in a methodical order. First of all, we're going to do the high for May 2011. The first thing we're looking at is, was there vertical movement prior to the high? Yes, there was 7 weeks. So yes, that condition is met. We'll look at all of these conditions for each of these highs in order. So that's why this is a long video. The reason why, before I get into it any further, the reason why I'm using this particular mix of technical indicators, first of all, it's really important to look at vertical movement because that's it's a stand-in for volatility really, and it's important to look at what the price chart looks like because it'll look different in bull markets during the middle of a bull market to the end of a bull market. And for a bear market, it'll look different from the middle to the end. Or we want to know, does it look different from the middle to the end? ATR is a measurement of volatility. So because we know Bitcoin has those big curves, that parabolic curve of extreme exponential growth with a short doubling time, ATR as a measure of volatility is really important to look at. We want to look at candlestick reversal patterns because that's one of the earliest signals of a major trend change. We're looking at volume. You always need to look at volume, particularly in conjunction with reversal patterns. ADX is one of the most important indicators I use. It tells you if the market is in a trending state or not, but it is limited because it's a lagging indicator because it's based on averages of past data. Likewise, these other indicators, RSI and money flow, also are lagging indicators. RSI is a very important measure of strength, and I add money flow because it gives us a little bit more depth. Sometimes RSI doesn't exhibit divergence, where money flow, with its addition of volume to its calculation, where RSI doesn't have volume in its calculation, money flow can be a little bit more sensitive, and sometimes it can show divergence when RSI does not. And then I make a conclusion. So these are the ones I'm choosing to look at in conjunction. I'm weighing up the evidence of all of these, and I'm saying how many of these conditions are met. Okay, so For May 2011, yes, we see near vertical upward movement. As we look at ATR, slow start, accelerate through the middle, explode at the end. So there was strong upward movement at the end. Now it's a lagging indicator, so it hangs on after the change. We do see a change in volatility here, and then we see the bear market continue and ATR starts to drop off. So ATR increases strongly to the end of the bull market. Yes, a strong increase. So yes, that condition is met. Was there a bearish candlestick reversal at the high? No. No bearish candlestick reversal pattern. What did volume look like? A strong increase at volume and a spike in volume at the high. So something changed with volume. We have a blow-off top here, an absolutely classic, typical blow-off top. That's really typical to see in commodities. We see extreme behavior in cryptocurrencies, like commodities, but much more extreme. So yes, we see a volume spike at the high, a blow-off top. How did ADX behave? ADX was very, very extreme. So there are two measures of how extreme ADX can get. The first measure is the black ADX line above both DX lines. Yes. The second measure is the ADX line above 40, or for some markets 45. Yes, for this market, well above that number. So very extreme. Yes, over 80, ADX meets that condition. RSI, very overbought, over 95. Now, RSI is a bound oscillator. It's bound between 0 and 100, so this is almost as extreme as RSI can get. And note, it had been extreme for a long time. This is why when I say when Bitcoin has a bullish move and RSI moves into overbought, sometimes I see people making a comment, oh, RSI is overbought. We have to see a pullback, or we have to see a change in trend. It has to move lower because now RSI is extreme. But no, you need to look back at the price history of this instrument with RSI and acknowledge RSI can get overbought actually really early on in a bull run. It can get extreme overbought like you probably won't see many other markets do. Yes, RSI was over 95, very extreme, but no, there was no bearish divergence. So don't always wait for bearish divergence. What about money flow? Now, I said that I want to include money flow because sometimes it'll show up divergence where RSI does not. Deeply overbought, again above 95, but no bearish divergence. So the conclusion for this is we have 6 out of those 9 conditions met. That's well over. That's a good, solid, positive indication with the conjunction of a complete Elliott wave count for the impulse. That's a solid indicator that you've probably got a high in place. For this one, my biggest concern would be there was no bearish reversal pattern. So obviously you don't have to see it because this was a high that was sustained and followed by a deep bear market. But the lack of a bearish candlestick reversal pattern could have tripped you up on that one. Let's look at the next one, April 2013. We see this vertical upward movement for the last 3 weeks. And remember the scale here, this is a semi-log scale, and yet despite that scale we see range increasing as well. Each of these candlesticks is bigger than the one prior. This is extremely impressive exponential growth. This is where you see the most profit at the end of its bullish movement. So that's why it's so important to be really, really careful in identifying these highs as soon as you can. So yes, we did see vertical upward movement for 3 weeks, so that condition was met. What about ATR? Yes, it was increasing strongly up to the end. Yep. What about a candlestick reversal pattern? Yes, a strong bearish engulfing pattern, and it had push from volume. We see volume increasing with a spike at the high. The high was actually within this week, and we see a volume spike within this week. So again, another blow off top. How did ADX behave? Again, very extreme, not quite as extreme as the last one, but well above 45 and well above both DX lines. In fact, for most of the last run, it was above both DX lines. So very extreme ADX. Yes, that condition is met. So far, all of them have been met. Okay, what about RSI for this high? deeply overbought. Again, extremely overbought, but no bearish divergence. Again, we don't see that divergence. Will money flow show it? Nope. Extremely overbought, no bearish divergence. So here we have 7 out of 9 conditions met. Importantly, a strong bearish engulfing pattern with support from volume. I would give this, in these conditions of a very extreme ADX and very extreme RSI, I would give that bearish engulfing pattern a lot of weight, and I would be pretty confident, as I was in November 2017, which we'll get to, I'd be pretty confident of calling a high there if the Elliott wave count was complete, and it is a beautiful fit and complete. This next high we're looking at, October 2013, is intermediate 5 to end primary wave 3. So this is a large degree fifth wave to end a large degree third wave. We're going to be looking for that for intermediate 5 to end primary 3 to come, and eventually even more extreme, I expect, primary 5 to end cycle 3 to come. So what did this high look like? I'm going to expect something very similar for these highs. Here it is, end of November, early October 2013. This was intermediate 5 to end primary wave 3. It was followed by a very sharp bear market. There's actually a fourth wave triangle, but this is the deepest part of that triangle. This is the end of wave A, which was a 93% reduction from high to low in market value. It only lasted 3 months, but the whole triangle was longer lasting. It just moved price sideways and probably tested patience. We have a strong vertical spike. I'm sorry, I'm going to have the fan on. I hope it's not bothering you. I did put a sock over the microphone, but if you hear that in the background, it's really hot here today. So we've got a vertical spike of 4 weeks up to the high. Yes, that condition was met. ATR showed a strong increase up to the high. Also a strong increase throughout the A wave of the triangle as well, this first part of the bear market. Yes, we see a strong increase in ATR. That condition is met. There's a strong bearish engulfing candlestick pattern. That condition is met, and very impressively it has push from volume. And we'll see the push from volume is extreme. This is a very, very bearish candlestick pattern. We did see an increase in volume with a spike almost at the high, but for the first time we see a decline in volume on the very last week. Now when we get to November 2017, I was looking for that then. I was considering that we could have a volume spike at the high, or we could see a little drop off in volume in the very final week, which we did. So I was aware that that could happen. Yes, that condition was met, increasing weaker in the very last week. That's okay. This is still a pretty typical look. It's not always the same, but this is what it can look like. ADX did tell us there was a very extreme trend. It was above 55 and above both DX lines at the high, but it wasn't as extreme as it could be previously. Now I like to use ADX a little bit like MACD as a measure of momentum. And I wouldn't call this divergence, but I would expect the middle of the third wave, this would be the end of the third wave within primary 3, and here's the end of intermediate 5 within primary 3. I would expect the fifth wave to show an extreme trend, but probably not as extreme as earlier on in the trend. So yes, ADX did exhibit a very extreme trend, but not as extreme as prior within the trend. This condition is met. RSI also very extreme, again above 95, very, very deeply overbought, but for the first time now we see bearish divergence. Third wave, fifth wave. Yes, both of these conditions are met. And money flow, again, very deeply overbought. Now we're seeing bearish divergence. Now for both RSI and money flow, I just want to draw your attention to why I will often say wait for a pivot to develop before you identify divergence. On this week, prices closed to a new, at that stage, all-time high. And at that stage, you could have said there's strong bearish divergence between price and money flow and price and RSI. Let's expect that it's over here, but no, you still had a huge amount of upward movement to go in terms of percentage and potential profit. So the first key would have been, is the Elliott wave count complete? And it probably wouldn't have been, but maybe you could force it. But the next thing is you really need to wait for a pivot to develop before you identify divergence, because it just disappeared. Well, it didn't disappear, but price continued higher, even though there was bearish divergence, you need to wait for the pivot to develop, at least with a candlestick in the opposite direction, before you identify, is there divergence. Don't do it prematurely, because that can lead you astray. So yes, there was divergence, and yes, money flow was extreme. In this instance, for October 2013, a fifth wave at a large degree to end a third wave at a large degree, we do see 9 out of 9 of these conditions met. Now let's move forward and look at November 2017, and this is the one I'm really proud of doing this. I wasn't analysing Bitcoin back here, and I didn't have my CMT back here, but in November, December 2017, I did have my CMT, I did have that training, and I did identify this high 6 days after it formed, and this is the technique I used. I looked at these 3 previous highs in a lot of depth, and I did a really thorough, careful Elliott wave count. So here it is, up to December 2017, we saw this vertical spike. That's exactly what I was looking for. Yes, that condition is met. ATR showing a strong increase to the high. Yes, that condition is met. We saw a strong bearish engulfing candlestick pattern. Yes, that condition is met. And impressively, it had push from volume. And again, this is the same look as we saw in the last one, and I was expecting this could happen. A strong increase in volume with that curved look, exponential growth with a strong increase in volume, and Bitcoin making news headlines. But on the very last week, a little bit of a drop off in interest, a tiny drop off from volume, and then boom, a bearish candlestick pattern with strong push from volume. And that's why I was managing to identify that high had formed 6 days after the event. And then what you need to look for is the first dead cat bounce, and you need to look for a complete Elliott wave corrective structure in the dead cat bounce to identify a really good exit opportunity. So a little bit of patience. You would have had to wait another 3 weeks. Would have been really nail biting, but that's what you could have done to get out with your maximum profit. You'll never get out right at the high, but you can get as close as you can to the high. And I think on the day I identified that high, the close was over 14,000. So not 19,800, but 14,270 something, I think. So relatively close-ish. So yes, you see an increase in volume with that 1 week at the end a little bit weaker, same as 2013. ADX does again show us a very extreme upward trend, but again, this is a fifth wave. But this is a fifth wave to end a first wave at cycle degrees. So this is primary 5 to end cycle wave 1s. We are still seeing between the third wave and the fifth wave, ADX shows a very extreme trend, but not as extreme as previous. So yes, very extreme, about 48, but not as extreme as previously within the trend, but still, ADX shows a very extreme trend. Yes, that condition is met. RSI deeply overbought. Now you could have, here's another real problem. You could have seen between this high, this pivot high, and this pivot high, and these points, you could have called for a huge bear market to follow here, but this was only about 4,000. You needed to understand that the Elliott wave count was incomplete. So the only thing that would have saved you from calling an end to it way back here, just above 4,000 and below 6,000, and missing out on that huge, more than tripling of your potential profits, would have been the Elliott wave count. So that's a very deeply integral part of my analysis, obviously, because that's my specialty. You could have identified it back here as well, but again, the Elliott wave count was incomplete, and in analysing this upward movement, I wasn't identifying the end until 6 days after it formed here. I didn't call for this, and I didn't call for this. I called for this. So yes, RSI was extreme, but no bearish divergence. There was previously, but it just disappeared. So the Elliott wave count is really important. Money flow, deeply overbought. Again, you could have seen divergence here, 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 but it wasn't until the end that you had that strong, that complete Elliott wave count, and all of these other conditions met as well, to be honest. So yes, money flow very extreme. There was single bearish divergence. So here, 8 out of 9 conditions met, really strongly indicating a high. November 2021, now this one is really different, and this one I really struggled with, and we're going to see why. So with a very strong, deep study of all of those previous highs, I was looking for those conditions to be met. First up, we do not see vertical movement at the high. This is the end of a fifth wave to end a first wave at primary degree. And it's a first wave early on, so we're not talking about the end of a huge first wave like cycle degree that's lasted 7 years. We're talking about a primary degree wave that lasted a year, primary 1 within cycle 3, so not as strong as the end of cycle 1. No, we don't see that vertical upward movement. We don't see an increase in range or volatility at the end. ATR actually declines at the end of this movement with this small range sideways week. So no, we didn't see that, and yet this high was followed by a big bear market, and we still are below those highs. This is the all-time high above 63,000. Yes, we see a strong bearish engulfing candlestick pattern, and I had expected a pullback, but I was not expecting the big bear market that followed until a little while later. So yes, we have a candlestick reversal pattern, and yes, it had push from volume. This candlestick here has a little bit of a push from volume, not compared to the previous candlestick, but still a reasonable push from volume. Overall volume declining at the end, ADX declining, indicating no clear trend. At the end of that bull market, there was no extreme trend. There is actually no trend indicated. So no, that condition wasn't met. Volume wasn't increasing, no blow off top. RSI, this is the one piece of information that could have, along with the Elliott wave count telling us there was a complete impulse, RSI exhibiting bearish divergence. And I did have an alternate that expected we could have deeper movement after a little while. So yes, we see RSI did reach extreme, and then at the high, triple bearish divergence. Likewise, money flow had reached overbought and exhibited double bearish divergence. So only 5 out of 9 conditions are met. So they're not all the same. They're all a little bit different. This one and this one are really similar. Oh, sorry, no, it's this one and this one are really similar. And this one, October 2021, the all-time high, that looked really different. So that was pretty hard to identify. So going forward, it would be one of these 2, 3. I'd be looking for situations similar to this for the end of primary 3 and the end of cycle 3 to come, but I will be aware that this could happen at the end. Now, it's happened once before, it could happen again. Now we're going to go through and look at lows. And now I hope you're going to understand why identifying Bitcoin's lows is so ridiculously difficult. The highs aren't easy, but you can do it. The lows, incredibly difficult, and to be honest, it's usually not for some weeks after the low that you're going to have quite a lot of confidence that a low has formed. So let's go through in chronological order, starting with September 2011. So this is the first deep second wave correction, intermediate 2, a 94% reduction in market value. We see a steady decline in slope to the end. So no, we do not see a strong increase in downward slope at the end. That condition is not met. ATR shows a steady decline in volatility throughout the bear market to the end. No volatility spike at the end. We did not see ATR increase until 7 weeks after the low. So you might have had to wait to see what I call strength off lows for 7 weeks after that low. We did not see a bullish candlestick reversal pattern either, so nothing close to the low to indicate it could be over. We did see a little bit of an increase in volume in the last week, but we see here a strong downward movement with a bit of increase in range here, bit of increase in volume, and yet overall price kept going lower. We see it again here, a little bit of an increase in volume, but not as strong as these two little mini spikes. And again here, a little bit of an increase in volume, but it just continues lower. You saw the same thing here. There's nothing to tell you from volume here that this time it's different. It's not until this week here that we start to really see a good, strong increase in volume. And on this week, you can start to have some real confidence that, hey, maybe that low is going to be sustained. So with the lows, you have to wait a while after them. So you're never going to get your entry point perfectly or really close to the low, but you can certainly get it reasonably close to the low, so you can get what I call the meat in the middle, which is going to be where your profit is. Trying to pick lows for these markets is just don't do it. It's really difficult. So no, we don't see a volume spike at the low. It's not until 7 weeks after the low we start to see some real strength from volume. ADX didn't even catch up with the fact there was a bear market. No downward trend indicated, let alone an extreme downward trend. RSI didn't reach oversold, didn't exhibit any divergence. Money flow did reach oversold, so this is early on in its price history though, so this is the first time it's ever done that. If we'd seen a bullish candlestick reversal pattern here with some strong push off the lows, could have had a little bit more confidence in that, but here I might have been waiting for another low and some bullish divergence to develop until we get to here and we start to see real strength. So here, despite money flow reaching oversold, I might not have picked that one. So there's only one out of these 9 conditions met. The only thing that's extreme about that low, which has been sustained to this day, was money flow reaching oversold. So that can inform us going forward further, but the biggest lesson to get from this exercise is that would have been ridiculously hard to identify. You need to wait for a few weeks to start to see what I call strength off lows, and at the end of this presentation I'm going to show you something that is going to give us a really good indication going forward. Next low, January, February 2014. This is a 93% reduction in market value. It only lasted 12 weeks, so in a very short space of time, a massive amount of value lost. We see the strong vertical downward spike. Yes, that first condition is met. ATR increasing to the low. Yes, that condition is met. So this is starting to look impressive. Candlestick reversal pattern. Yes, massive bullish engulfing candlestick pattern, with 2 really strong bullish long lower wicks. If you've been a member here for a while, you'll know I like to pay attention to candlestick wicks, and we've got 2 big bullish wicks here. That's really bullish. So yes, that condition is met. What about volume? Yes, showing an increase to the low with the very last week, a slight decline in volume. Beautiful. That condition is met. This is looking really strong now. ADX, well, ADX here is based on a 14-week average. This bear market only lasted 12 weeks, doesn't have a hope of catching up. So the lagging indicator isn't going to give us any assistance here. RSI, nope, didn't reach oversold, didn't exhibit divergence. What about money flow? Nope, didn't reach oversold at the low, didn't indicate divergence at the low. So we've got 4 out of 9 conditions met here. So you could have been maybe expecting one more low to see some bullish divergence, but I think that strong bullish candlestick reversal pattern with those bullish long lower wicks would have been a really strong giveaway for that one. But I wouldn't know how I would have approached it because I wasn't analysing this market that far back. December 2018, I was analysing and didn't pick this one up until I think May, June 2019 when I started purchasing Bitcoin, when I had my bearish wave count invalidated, leaving only a bullish wave count. And using that simple process of elimination, I was able to identify, yes, Bitcoin's in a new bull market early enough to buy and still have a profit. So again, you can't get right at the lows. Don't expect to get these lows, but going forward, let's see if we can if we can get as close as we can. So yes, we see an increase in the downward angle of slope toward the low. That first condition is met. A little bit of a decline in the last 2 weeks as it just runs out of steam. ATR shows an increase. This is the boxed area. These are equivalent. ATR shows a little bit of an increase toward the low. Yes, that condition is met. A strong bullish engulfing candlestick pattern. Yes, that condition is met. With support from volume, very importantly, that condition is met. And I would like to see support from volume for these lows. You don't always see it, but when you do, it's impressive. So volume declining at the low, the bullish engulfing candlestick pattern has support from volume at the low. Next condition, ADX. Yes, it did indicate a downward trend, but it was nowhere near extreme. It's only managed to catch up because this bear market lasted 51 weeks. So no, a downward trend, but nowhere near extreme. RSI did not reach oversold, no bullish divergence. Money flow also didn't reach oversold, no bullish divergence. 3 out of 9 conditions are met. Well, it's stronger than this one, isn't it? But still, not actually that strong. The strongest indicator you could have would be that bullish candlestick reversal pattern and the increase in the slope and range of that downward movement. Next low, this is November 2022, so this is the most recent one. So this is the end I have a primary wave 2 within cycle wave 3. It's only a 77% reduction in market value, so it's on the shallower side for Bitcoin, that is. It usually has an 80 to in the 90% reduction in market value. Its bear markets seem to be getting just a little bit more shallow as we go on. A little bit of an increase in the slope of downward movement, but the last 2 weeks it just moved sideways. So there was a spike, but then the final 2 weeks are sideways. This is subjective, but I'm going to say no because I'd rather be conservative. That condition is not met. ATR, steady decline throughout this bear market. No spike in range and volatility at the end. So nothing changed at the end to indicate us that something was different. There's a candlestick reversal pattern. It's a hammer candlestick, this one right here, but that's not the strongest candlestick reversal pattern. So yeah, we do see it, but it's not as strong as a bullish engulfing pattern with push from volume. Volume, we have a strong spike in volume on this downward week before we see a little pause at the end. So yes, that's impressive. We see that strong selling climax with a little bit of a decline right to the very last low, and then 7 weeks after the low, just going back 7 weeks after the low, we're starting to see an increase in volume, and here this upward week we start to see really strong increases from volume, so that's bullish. ADX, how did that behave? Did indicate a downward trend. It was just extreme. It had reached extreme previously for this bear market. So yes, an extreme, but not very extreme downward trend. That condition is met for the first time at Bitcoin's lows. RSI had reached oversold back here, and here now it exhibits bullish divergence. RSI has only reached oversold once before in Bitcoin's price history, and that was also associated with a sustained low. So yes, that's extremely bullish. Money flow likewise between the same price points and the same points on money flow, yes. Didn't reach oversold, but it's exhibiting bullish divergence. So here we get 6 out of 9 of these conditions met. So we should have some reasonable confidence in using this approach that it's very likely, not certain, none of this is certain, this is as always an exercise in probability. It's more likely than not that the October 2022 low, September-October, last year is likely to be sustained, and that's why it's my invalidation point. What about the current low? We've only got so far price this week is just essentially moving sideways after last strong upward week. It's just having a little pause. So what does this look like using the same approach? Well, first up, there's no spike and no strong downward slope at the end, and it's not a very deep bear market. It's from high to close, I think it's only 18.9%, so not technically a bear market. From high to low, it's just on 20%. So no, a steady decline in slope throughout this short little bear market, or pullback, whatever you want to call it. Probably should technically call it a pullback. ATR showing a decline throughout. No increase, no change to alert us that anything changed at the low. Candlestick reversal pattern, massive. This is a strong bullish candlestick. These three together, a morning star, not ideal. This candlestick, the star, is not detached from the first of the 3 candlesticks in the pattern, but when you look at Neeson's, which I like to use the original, when you look at Neeson's candlestick pattern book, he does have some examples there which he calls stars where it isn't perfectly detached. So I'll accept it. It's not the best looking star, but I'll accept it. So yes, we've got a bullish reversal pattern, really impressive volume for that 3rd week though, so that's really bullish. Now, when you compare it to the previous week, so This is not certain. I am really concerned that it is brief, and that's why I have that alternate. But it is looking more than 50% likely, I'd say maybe 60% likely, that this is the low for intermediate wave 2. No increase in volume at the end, very, very light volume, a little increase 2 weeks after the low. ADX not indicating there's a trend, let alone an extreme trend. RSI nowhere near oversold, still above the halfway mark in positive neutral territory, and likewise money flow. So there's only 1 out of 9 conditions met. This is as weak as that first low, but the lesson I want to take from this is it doesn't have to be really strong. This November 2011 low, this is still held to this date. And so that is telling us that just because the technicals look weak at that low doesn't mean it can't be held. So along with the Elliott wave structure, the morning star candlestick pattern with push from volume for last week's strong upward week, that is the strongest signal we have. But there's one more thing, and this is where I think I'm really going to be more confident in this. Well, actually in the November last year low, not the latest one. Oh, I'm going to call it J curve. Sorry, I didn't let that play all the way through. Cool, isn't it? I like that. Okay, so the latest, we don't have a J curve yet, but if we go back to, this is the November last year low, 15,599. This is one reason why I am really confident, not 100%, you can't be 100% confident of anything, but like maybe 85, 90, 95% confident that this low is going to be sustained for probably the long term, some years. This is one reason. This is the strongest, one of the strongest parabolic curves. I'm going to call it a J curve because it's easy. I like that name. It looks like a capital J, doesn't it? This is what, when you see Bitcoin make a strong bullish movement, this is how it looks within its bull movements, particularly its third waves, and particularly fifth waves and third wave impulses 1 degree higher. I keep talking about Bitcoin having a slow start, acceleration through the middle, and explosion at the end, and it gives it this curved shape to it. The second wave corrections show up. There are brief shallow fourth waves in here. It gives its impulses, 5-wave impulses, very much a 3-wave zigzag look because of that parabolic growth, or that J curve. So this is within a bull market off that last low in November 2022, and that's why I think that it's really likely that this low is going to be sustained. And if we start to see Bitcoin do this again, then I'm going to have even more confidence that the more recent low a couple of weeks ago is going to be sustained. We haven't seen it do that again, but I'm looking for it. In 2020, we see this J curve, not as good a one as this one. And in 2016, again, slow start, acceleration through the middle, explosion at the end. 2019, a smaller version. We see some more. 2015, this looks pretty good. 2016, again. 2015, beautiful. This is a really nice example. Massive explosion at the end. Huge bearish upper wicks at the end. And it's fractal. We see small ones inside bigger ones. So in 2016, really nice J curve here. Going all the way back to 2010, you can see a really small little example here. 2012, that nice curved growth. And 13, nice curve, another nice curve in 13. But what do the bear market rallies look like? Because in order to identify if J curves are just a feature in a bull market, we need to compare and contrast them to bear market rallies. Do you see that in a bear market rally? Maybe. And if you do, it's a really not a good example. This is the best example. I spent on the weekend quite a lot of time trolling through Bitcoin's daily chart, just a price chart, just looking at the candlesticks and how they looked. And within all of the big bear markets that were technically bear markets and all of their rallies, this is the closest to that parabolic growth we see. And as you can see, it just doesn't look as good as the J curves that we see in full-on bull markets for Bitcoin. So a bit of a slow start, acceleration through the middle, doesn't really have that explosion at the end. So just doesn't really look that great, does it? More often it's just these this looks like a movement of a forex market, really. This is what I'd expect a bull market for euro to look like. And here, this is what bear market rallies almost always look like. This is not that beautiful curve, not a beautiful curve, just a straight up with these big corrections along the way. Straight up, corrections along the way. Straight up, and a slow end as well. So that's it. The reason why I expect, let's go right back to your wave count. The reason why I expect that this low back in November 2022 is most likely to be sustained, and so that's the end of primary 2, is because we see this J curve in here. It's right in here. It's a beautiful looking one. I'm going to be looking for another one going forward, and if we see it again, I'm going to have more confidence that this low is sustained. But until I see that, I'm going to have that alternate that says intermediate 2 could be A, B, C, and could correct lower to just above 20,000. Okay, that's it. I hope you find that useful. I'll keep this as a resource for people to refer back to. I'm going to use classic technical analysis extremely heavily, along with a complete Elliott wave count, to try and identify the end of primary 3 and then cycle 3. And depending on how long it takes to get there and what stage I am in my life cycle and what I'm doing with my travelling, I may exit at primary 3 or I may exit at cycle 3. So that's my plan, and you'll be included in that. And thank you so much for your support, everybody. Couldn't do all of this analysis without your support.